Hey everybody, Will Fix here, got another video for you today. XRP holders may become the banks. It's compelling, isn't it? This may be more true than you really think right now, but we're going to get into it and discuss it. We're going to speculate on it. I want to get your opinion. I want to see what you think about what I have to say here, where XRP holders may become the banks. You may become the ones that are lending the money and be able to do it without pulling credit reports on people, and do it with an absolute guarantee that you will earn a yield and an absolute guarantee that the funds are backed. Wow, how can that be? You can lend money. You can maintain the possession of your XRP. You can lend money against other people's and then possibly either be paid a yield or, in worst case scenario, end up owning more XRP. Let's go ahead and talk about it and see what the implications may be, all sparked from an article that we're going to look at. And right before we get started with the article and this discussion, let's go ahead and look at the Decent Wallet. Hopefully you're not leaving your cryptocurrency on the exchanges. Exchanges can fail and get hacked. If you don't own the keys to your coin, then you're not in custody of your coin. Someone else is. Be sure to get yourself a cold storage wallet. I suggest the Decent Wallet after having owned several different wallets. I like the Decent Wallet. I like the easy access with the thumbprint. I love the features inside, how it Bluetooths with my phone and gives me a large screen. I also like how I can order two. I use one for a moon bag, coin I'm not going to touch for maybe years. I use the other one as just my regular wallet. You can order two for $219, that's $99 off. Or you can order one if you wish. When you order, your shipping is free if you live in the US, the UK, the EU, or Japan. Order one today. I think you'll be satisfied. To order now and get the discount, you can use the link that's appearing above my head. There's also a link in the description, and generally there's one at the end of all my videos. Go ahead and order now. You'll be satisfied. We will be doing the AC/DC segment that I used to do on this one because it involves an article. So be sure to tune in there where you can make your comments in the comment section and we can hear from you. Fed Chair Powell calls on Congress to create greater regulatory apparatus around crypto. Wow. There's some discussion needs to go on here about that. Fed Chair Jerome Powell urged Congress to establish clearer crypto regulations, noting the need for better investor protections. And I got some thoughts about why would the Fed chair, here's the question, why would the Fed chair be concerned about regulations in crypto? The Fed chair is all about banking. It's all about the banking system. It's not about the crypto world. That's in the past administration, those two were at odds with each other. The crypto world was against banking, and banking was against crypto. And so now you have the Fed chair going, hey, we need crypto regulations. That's not his place, is it? He's not the SEC. Is he worried about regulations? He's not worried about regulations, is he? So what's he worried about? Well, let's read a little more. Then we're going to discuss what I believe he's worried about, which I believe is not just what I think, but it has to be the reasons that we're going to talk about. We're going to talk about how crypto is coming in to change the whole world of banking. And then I want us to speculate on a few changes that may take place. Fed Chair Jerome Powell said cryptocurrency confirmed that banks can still work with crypto customers if they manage the risks properly. On January 30th in a press conference, Powell addressed concerns from the Financial Stability Oversight Council's annual report, which flagged cryptocurrency as a potential financial risk. Banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound, Powell said. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. Powell added that the Fed is not against innovation, but wants to prevent banks from feeling forced to cut off crypto businesses due to the regulatory pressure. We certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, he said. This is interesting. Is your mind really ticking with all the motivations that could be going on here between crypto, bank, and how Powell's addressing this? Isn't this just awesome? So we'll talk about it. Powell noted that individual investors need better protection, as many don't fully understand the risks of investing in cryptocurrencies. He compared crypto to stocks and mutual funds, saying that similar consumer safeguards should apply. Congress needs to step up on crypto regulations. Powell also urged Congress to establish clearer rules for crypto, noting that lawmakers are already working on related policies. I do think it would be helpful if there were greater regulatory apparatus around crypto. And I think that's something Congress was working on quite a lot, Powell said. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be very constructive, a very constructive thing for Congress to do. So Fed holds rates steady, market reacts. As expected, the Federal Reserve kept its benchmark interest rate at 4.25% to 4.5%, making the first pause since the Fed began cutting rates last September. The language on inflation was more cautious, removing last month's mention of progress towards the 2% target. Following his remarks, both Bitcoin and stocks rebounded, with Bitcoin rising above 104,000 by the end of the conference. And that's the article. So now let's talk about and speculate on where the motivations are coming from for Mr. Powell to be so concerned about crypto regulations. Now, I believe the concern is really kind of unveiled by the article itself. Right here, the Fed chair said cryptocurrency confirmed that banks can still work with crypto customers if they manage the risks properly. So then in the press conference, he addressed concerns from the Financial Stability Oversight Council's annual report, which flagged cryptocurrency as a potential financial risk. Now, the wording's quite different. You know, the past administration, it wasn't potential financial risk. It was only owned by thieves and only used by cartels and, terrorists. So the wording's quite different. Now we're getting suggestions from Powell about regulations being passed. Now, I believe that the concern here is the shifting of the money going into crypto and the DeFi world. Digital finance has really started to grow immensely, and a little bit of regulation is really going to set it off. And there's a lot of ideas out there, of how DeFi can affect. Let me throw out a scenario for you. Say a smart contract. Let's say you have $15,000 worth of XRP. So you have 5,000 XRP worth $3 each. And you develop a smart contract, which you can do with mere speech through the Quant system. I don't know if you knew that, but Quant has a system where you just talk and tell what kind of contract you want, put in the details, and it creates the smart contract for you. Then you got to test, it's got a sandbox, so to speak, there that tests out the smart contract. Now let's say just Joe Schmo comes up with a smart contract that will give a guaranteed loan of $7,500, and the contract will hold the collateral, and let's say it's at a 100% collateral. In other words, if you want to borrow $7,500, we need $15,000 of your crypto and hold 5,000 XRP. Inside the contract, we establish what the payment system may be, a 6-month loan, a year loan, whatever the terms are. Let's say the smart contract can receive the payment and the interest rate. And then the smart contract also would understand that to exercise the ownership of the collateral to the party that created the loan if the contract went in default, after all the safeguards, after all of the time periods that it needed to be. And so your money was 100% safe, and let's say you're charging 10% and you can give a loan in minutes. You have a smart contract. As soon as you deposit the XRP, the $7,500 is released to the person's bank account, and it's an instantaneous loan. Why would you do that? You could just sell your XRP, because people don't think $3 is enough for their XRP. That's why. But they might need money now to buy a car, but they don't want to sell half of their XRP and buy a car. So they may want to just do a loan and go buy a used car for $7,500 with a loan, and then their car payments to the smart contract. Now the person making the loan has a guarantee. Is it a guarantee? Well, it's a guarantee that they'll get the 5,000 XRP. It's not a guarantee what the price would be. So what happens if the price goes down? Well, you can have in the contract, if it went below $1.50, you would need more collateral, or they'd have to pay the loan down. And of course, if the loan was already paid down, that wouldn't make a difference. However, if it goes the other way, you would have an over collateralization, which then, if at a certain point, you could have the over collateralization of the loan actually become the termination of the loan by paying the loan off, because XRP went to $6, $7. So now the loan's over. And so what do you have here? You have an average guy that's got 5,000 XRP making a return on his money, and he's guaranteed, to get his money or to get more XRP. So I'm sorry. So if he's the guy with the money and he does the contract, then he would be the one guaranteed the 5,000 XRP if the loan defaulted. Now this totally cuts a bank out, and the loan could be done in 1 minute. You wouldn't even need to pull a credit report, would you? So the danger of XRP, or the reality that XRP is going to create a few billionaires and millionaires all over, and people are already savvy about smart contracts. How many people are going to be creating their own bank? Because it's legal for me to create a smart contract and loan somebody money. I can totally do that on my own. If my bag goes to several million and I decide I want to do loans, I could do tons of small loans for a segment of my money, pay out the money, be guaranteed to just get the collateral. It's collateralized, or I get the payments. Either way, I make money, in my opinion, if I'm safe with that risk in owning more, or whatever asset it is, by the way. Maybe you want to do a different asset. Maybe you want to do Ethereum, Bitcoin, whatever the case may be. But what an interesting idea. Now, I believe the banking industry understands this. If they don't get regulations to handle cryptocurrency and to be able to do the same, just like my last video, look at the video that I did yesterday and talked about a XRP loan, collateralized loan. Why would somebody want to do well, there's no taxes on the loan. If all somebody has, if all you got is 20,000 XRP, and XRP's at $10 each, you can start taking loans against that and maintain the asset, keep your XRP, get the money too, and not pay any taxes on it. Well, it's just genius. Well, the banking system needs to be able to offer this, is I think what Fed Powell's saying we better get the banks on this, or we're totally out, and DeFi takes over. And I think a lot of DeFi is going to replace a lot of the banking industry. I think the banks, if they get on it early, they can maintain a lot of the loans, because typically a person wants to do business with a bank. But what's the likelihood of some sites being made where the smart contracts are offered? What if I create a site and then you can bring your XRP there, and not that you deposit it with me, but through a vetting process, we get you on the platform, and you could loan your money and make 8-10% on your XRP, loaning it out with smart contracts and the over collateralization guarantee. What if that was a place that you could come and do business? I think it would be awesome. So, a little bit of speculation. Hey, I hope you like this kind of content. I just thought I would share that with you. There's some changes coming, and it's kind of interesting to run that through your mind. Tell me what you think. What kind of changes do you think will take place in the banking industry? Do you think banks are here to stay, or do you think they're going to go? So if you think banks are here to stay, say, I think banks are here to stay, because what you'll really be saying is, I think they'll bend with the times and stay relevant, which is totally possible. Or, well, banks will end up dying, and the DeFi world will create new ways of banking, bypassing the banker and the Fed. That's totally possible. Bypassing Fed rates, where we have our own interest rates. Anyway, please like and subscribe. I'll see you next video.